Good morning, everybody. Welcome to the Trading Market Technicals Morning Call video for August the 20th. For last week and actually several weeks in August, we've had nothing but the same thing, grinding in between inside days. Small pop higher, market stays up, elevated again on Thursday, and then we had that move up on Thursday, and now we're basically inside day on Friday. Typical August summer doldrums trading. And we're going to have at least another couple weeks of this. Need to stay on your toes because we are at extreme lofty levels here. I think the June 4th market move higher is a little bit long in the tooth, but however, we could stay overbought for quite some time. We are looking at on Wednesday. I did mention that I think that we're going to have a more upside before we move lower. Sure enough, we are moving higher. We're into that 1422 coming up shortly. That could be done today. And a break above 1423, 1424, and we hold. I think we could take a beeline of the August 8th, 2008 highs, believe it or not, of that 1440 area. And it's possible because the ECB and all of our central banks, European central banks, and the Fed here are doing what it takes to keep this market elevated and keeping money into this market. Now, it looks like that the market is moving higher and everything else is moving higher. And all the indexes are, but a lot of stocks, some of them are just chopping around here. We're talking now the last few weeks. So we could move higher, and it looks like we may possibly move higher. We did have some news that that the ECB over the weekend may be considering, and this is Draghi now, may be considering putting a top on a yield threshold for a lot of the nation's borrowing costs in September. Now, if that happens, then I would say that we're going to have a real big rally for a few weeks and even take out that 1440 area, believe it or not. And the reason why is that then all of the talks and all of the meetings that the ECB had is actually coming to fruition, and that's what the markets want to see, and they're going to buy this market up even higher. Now, that's in September. I would like to see a little correction here to buy stocks with both hands and really feel comfortable about it and reduce some of that risk. Buying stocks up here is really, really risky if you're holding them. If you're day trading them and you could find a good spot for a day trade, absolutely. But buying stocks up here are a little bit long in the tooth, and we could get a pullback any single day. Now, we don't want to be positioned short here, right? I mean, unless you're hedged against a long portfolio, absolutely. That I would definitely recommend. But taking a couple shorts overnight really doesn't make any sense. And we're up about 2.5 right now in the overnight session. Quiet, but again, it doesn't make any sense to really be looking to do something like that. All right, so let's go into what we're looking at. I want to show you the breadth of the market. Nasdaq advanced decline is improving. If you can see this little area here. All right, so we do have some positive breadth in the market. I want to show you the New York Stock Exchange took out the high. But again, what's happening is that the industrials, the Dow Industrials, and the S&P are moving higher, where the other leaders are lagging. Now, they are catching up, so divergence is starting to dissipate here. But we just want to make sure we see all of the sectors that need to be moving higher are moving higher along with the markets, and that's a good sign. Okay, so now let's take a look at our put call. 0.75%, one of the lowest readings of the year. We are in this bullish falling wedge pattern. Keep an eye on this. I think this is going to be a real good telltale sign along with the VIX. And something, if you could see something like this, you'll get what I'm saying. Once we see some movement, I'll explain it to you a little bit more in detail. Now, the VIX breaking down again. Now, this is going to be, to me, I think this will break below this Bollinger Band here, come back inside, and that'll give us a little buy signal for the VIX and a sell signal for the markets. But again, guys, looking at the markets, I'm looking at a little more upside, 1422, 1423, and if we do hold, then I think the 1440 would really take shape. And that would be a decent move to the upside. New highs, and as you can see here, new highs versus the S&P. We want to see this actually make new highs higher, while the S&P, right? If you're not making new highs and the S&P's moving higher, well, that's not a real good sign, is it? And we did spike up a little bit here, but if you looked at this area here, this validates the move on this in this section here. But we've been making new highs, and now we actually fell lower while we were just grinding higher. As you can see here, all this is just a summer grind higher right up in this area. Now we did spike, which is a good sign, but we haven't really taken out these highs. So this to me is a warning sign, and that's something that I wanted to basically kind of point out. Okay, the NYMO. Like I mentioned, we've been chopping around between negative 30 and plus 30, and we're still here. You see here, back in this area, we could move a little higher, okay, and that would still not put us really in oversold territory. So I'm sorry, overbought territory. So that's why by looking at this, and even though you have we're grinding around, the markets can actually move higher without really being in extreme overbought state. And this is from the McClellan oscillator. Okay, now we are overbought. Don't get confused, but to show that we can be overbought even more before a lot of these big trusty indicators can actually say, hey, we are moving lower. Okay, copper, still lagging, as you can see here. We're at all-time almost highs of the year, and copper hasn't moved. Now, it can play catch-up, but it's something that I want to make sure you guys are aware of, okay? Again, this is just, the song remains the same, but I just want to point this out. Dollar. Again, still consolidating up in this area here. Small inside day from the previous day, showing a couple of spinning tops. I like to see this dollar. If we do break out to the upside here, then I think you're going to have a good beeline here. And then once we really make to these areas, then I do think the dollar starts to really sell off. But again, that's still it's going to take a little time. But it's something that I want to point out to you guys while we're just chopping around in the summer. And believe me, it's going to get worse. It's absolutely going to get worse. We're sitting around all day. A lot of guys aren't doing anything, and to be expected because a lot of the big players on Wall Street are either away, down the shore, at the Hamptons, and they have second and third tier guys watching in case something does happen. But remember, guys, news can trump the charts, and I want you really to be prepared for this. Don't get caught on one side and then the market just literally just falls out of bed because it can. There is absolutely no selling. There's no short selling at all looking into this market, if you can see. And believe it or not, the shorts actually can hold this market up when you have some extreme sentiment. But we don't. We have extreme sentiment to the downside, meaning that the put call is so low that any negative news, I think, can move a little bit lower here. But we have some decent numbers, putting in 1420, 1422. So we got to really use caution. And we also have the FOMC minutes coming out this week, so that's going to really be dissected to see what's happening with QE3. All right, let's go into the charts. Really nothing much has changed. As you can see, we've been grinding higher for the last 8 days. We had our pop-up on Thursday. We had our inside day really stuck right around that, right around the high, and we're at the 1422, 1424 area. This is going to be extreme resistance. I do think sellers will come out up into this area here, and then look, even if we push it back down to 1380, back down to the 20-day moving average, which really isn't much at all, then I think we can get one more big pop, probably set up for a decent move going into the end of the year. So that's something that we'll keep an eye on. IWMs, if you notice, look what happened here. We had the IWMs very weak, and we had the transports weak, and I said, look, they could play catch-up, keep an eye, and this is what's happening. Now, a lot of the small caps aren't really, I don't see a lot of the stocks that are really moving, but a lot of the indexes are really taking shape. And it's still a good sign, though. Markets are better. I mean, I looked at about 300 charts last night, and they're all setting up really, really nice. But that's what scares me. When everything looks really just so perfect, something throws something off. So we just need to really use caution here. But looking at much improving in a great way here. But volume, again, still light. Better volume than last Thursday and Friday. But again, volume very light, guys. Okay, transports. Okay, looking really good here. Up to this area here, I wouldn't basically negate the pattern. Another day or two, breaking above the shoulders here, I would just really take this head off. And it looks like that we have a breakout in a symmetrical triangle. The MACDs and stochastics looking good. Not overbought yet as well. Again, playing catch-up, which we want to see the leaders lead and everybody, the S&P and the Dow Industrials really start to play catch-up. But this is the opposite. But again, still healthy, better than expected. So the transportation is looking pretty good here. And then we have big cap tech. And as you can see, big cap tech really really pushing its levels up to this channel. Again, all on low volume. We are overboard here in our stochastics in our MACD, so we want to really use caution moving forward. Again, not that you can't trade the long side. We don't want to start looking to short the market, but we just want to stick with the trend. We use caution. Take our profits a little faster if you have them, and reduce your exposure by limiting your losses. And again, guys, if you're uncomfortable, cash is a position right now. Last 2 weeks of last 2 weeks of August, and it's just going to get worse and worse here until we get into September. Okay. So remember, guys, use caution. We have FOMC coming out this week for a statement. They're going to dissect this to see what's going on with QE3. One negative news, remember, we need a catalyst, and we can really get a little bit of a pullback, which I think would be extremely healthy to move into really move into the year. We need the volatility to pick up some trading. Without this volatility and just kind of relaxing and doing nothing and grinding higher, really not much to do at this time. But again, we'll just monitor the charts, trade the best setups, and then we'll go from there. Have a great day, and we'll talk to you tomorrow. Take care.